What is going on, investors? Welcome to Everything Investing. I hope you're having a great day. Today, we're going to talk about Google's Q2 2022 earnings results as the stock is up just 2% after hours. And we'll talk about what this means from a fundamentals perspective as we're coming off a 20-to-1 share stock split, which is why we're down at $105 currently when the stock was actually at $2,000 just over a month ago. And this is coming off a Q1 that definitely disappointed from Google standards. And that's why we're actually down just about 25% since March of 2022. So if you're a shareholder of Google, you're in the right place as we'll be going through the numbers, the top line, the bottom line, the cash flows, and what Google's doing with them to reward shareholders. And finally, we'll conclude with an evaluation of this business to see whether or not this is something we as retail investors should add to our portfolios. And if you enjoy the analysis and the value investing perspective, please like and consider subscribing for more of this content. And as always, we'll be analyzing this business in 5 minutes. So let's jump into it. So Google, a business that needs absolutely no introduction as you're using it right now to watch this video. But what are they focused on? And as you can see right here as a message from the CEO himself is that they're focused on investing for growth. And they're especially interested in investing into deep computer science for the long term, which is interesting. And they also made special note that despite all the headwinds and the current economic challenges most businesses are facing right now, most of their performance was driven by search and cloud. And we'll get into that in just a second. So revenues for the quarter came in at let's call it $70 billion. This is up 13% year over year. And actually, if we look at this from a constant currencies perspective, as they are experiencing challenges with exchanging foreign currency, this actually would be an increase of 16% in terms of their revenues year over year. Their margins also actually ticked down slightly down to 28%. We'll get into more of this in just a second. Let's actually go through their statement of income here. And as you can see here, we'll look at this from a year-to-date perspective. So far this year, they have about 137, let's call it $138 billion in revenues. Last year, they only had 117 at this current point. So they are doing better and they are sticking to their growth story. Cost of revenues, of course, as their revenues typically will grow, so will the cost. So we'll see costs have increased across the board. And they come out with about total costs and expenses of 98, let's call it $100 billion. That's definitely a sizable increase in their costs, but it's not an investment deterrent as this is a huge conglomerate in this space. So we come out with about 39, let's call it 40 billion in income from operations, deduct our provision for taxes, and we're left with $32 billion for the first 6 months of the year. And overall, for this quarter alone, we're at 16 billion versus year ago, we were at 18 billion. So yes, while this doesn't look amazing year over year, we also have to take into consideration the current economic environment that we're in. A lot of businesses are going to be showing similar results, especially with what's going on in the Ukraine and with Russia, as Google also had to suspend some of their business in Russia because of the war. Yeah, we're going to see some challenges here, especially in the bottom line and in the cash flows. We'll get into that in just a second. I want to point this out to you. Diluted earnings per share came in at about $1.21 for this quarter. And remember, we're going to be using this for our evaluation later on in the video. So for the 6 months of 2022, let's call it $2.50 in earnings. Now onto the balance sheet here, we had about $18 billion in cash. We also had about $107 billion in marketable securities. So really, guys, we can say they have about $125 billion in cash because marketable securities are extremely liquid, and that is how the balance sheet works. They rank things from the most liquid to the least liquid. So yes, we have about $125 billion in cash here. Remember that. Nothing else sticks out to me in the balance sheet except for the debt here, which is extremely small in comparison to the large amount of cash position that they're sitting on right now. And especially if we compare it just to the cash alone of $18 billion, it can cover the debt already. So the debt is not a problem. Their liabilities are not a problem for this business. And that's why shareholders' equity continues to grow. Now onto the statement of cash flows here. We drag down our net income figure of 16 billion. Actually, let's use our 6-month figure here. So $32.5 billion in net income. Add back in our depreciation, amortization, stock-based compensation, and we're left with a figure here of about $44 billion in operating free cash flow, which is pretty strong here, right? Deduct our capex figure here of $16 billion, and we're left with about $27.9 billion. Let's call it $28 billion. So what do they do? What does Google do to reward their shareholders? Well, they actually are going to use all of that $28 billion on repurchasing stock, and they're going to use a little bit more on their payments for stock-based award activities, okay? So Google is currently really focused on driving their share price higher because that is the purpose of repurchasing shares. It is taking some off the market, making the shares more valuable. And how you can rationalize this in your head is that if there was only 100 Lamborghinis left in the world and then the Lamborghini owners bought back 20, let's say 30 of them, So there's only 70 left. Those 70 have now just increased their value exponentially. That's the exact same thing that happens to the value of the shares and the share price when you buy back shares. And that's what they're focused on when it comes to rewarding the shareholders. Now let's jump into our calculator to see at what price we can actually come in here and pick up shares for Google at a margin of safety. Okay, so for Google here, if you recall, they had about $2.50 for the first 6 months of the year. If we extrapolate that out, we can assume they'll make it to about $5 in earnings per share by the end of the year. Now, if we expect a required return of 10%, they currently do not pay a dividend. Instead, they're investing that into growth, into the business. Let's say they can continue to grow. Right now, we said it was about 16% year over year. So let's give them 15% for the first 5 years. And then let's say the economic situation changes after 5 years. They can start growing back at around 20% on a 20 PE. This stock could be worth $176. Now, if they can grow at 25% and they can boost their growth rates, then it will subside. Let's say it'll normalize down to about 15% on a 25 PE. This thing could be worth $282. That's almost 300, and that's almost a 3x from this current position where it's sitting at $100 per share. Now, if they are stuck at 13% going forward and then actually drops down to, let's say, like 8% growth year over year, I mean, they are growing some of their business segments at a much higher rate. This is very conservative. I mean, yeah, $80 is very cheap for Google. I mean, I would be in here putting all my life savings in if it was worth $80. But even if it slows down to 10%, yeah, we're looking at about $85 for an absolute bargain on Google. And if we look at this from the stock's perspective here, we are sitting at a PE ratio of 19. So it's not insanely cheap right now. It can be a little bit cheaper, but you also have to understand that with growth stocks, these things don't get that much cheaper. And actually is the reason why I've actually started a position here with Google here. I think despite the fact that the market cap is sitting at about $1.4 trillion and the PE ratio at 19, I don't think that the growth will slow with Google. I think the growth, if anything, will increase, especially once we get past this economic hardship we're currently going through. We could get back to some nice numbers here, but that is my own opinion. Please do your own due diligence when it comes to Google and investing in general. With that being said, that is my analysis of Google's Q2 earnings results. If you enjoyed the video, please give it a like and subscribe, and I'll catch you on the next one.